Dan Fitzpatrick here at stockmarketmentor.com on Tuesday, March 6th. And today, let's just say we got a pretty nasty correction. I think actually it was healthy. It was also about the most predictable correction in the world. And I mean that honestly when you look at the divergence between the S&P and the Russell 2000, as well as a couple other divergences which we've been talking about in Stock Market Mentor. But here's the thing, I want to just focus on Apple. As you know, tomorrow, March 7th, Apple's not releasing, but they are revealing details about their new iPad, iPad 3. This is something that we've been kind of focused on, I should say. I was going to say worrying about it, I'm not worried about it, but I gave you a video, I think it was last week, talking about how to trade Apple. And you know, I've been kind of tentative about this stock because it's run so high, and I'm very well aware of that dynamic of buy the anticipation, sell the event. This type of deal here over the last, basically just today, not yesterday, this type of deal today was actually what I would have expected either tomorrow, depending on when they actually get it done, and I don't know what the time is, or Thursday, where you get all these traders that had bought in anticipation of this iPad release. They know there's going to be a lot of demand for the stock. iPad, the details do come out. They take their profits. Nothing wrong with the company. Nobody's disappointed in the iPad. It's just that this is the dynamic of trading. When you're right about a trade, the only time you get rewarded is when you actually close that trade. So being right is not enough. You know, there's that old adage about would you rather be right or make money? I'll take the money every time. And so you have to be ready for this. Buy the anticipation, and then once the event comes out, bam, take your profits. Then reload. Then look to get in again. Now, the reason I'm going into this detail is this. It kind of makes Apple even a little bit more, not difficulty, but a little riskier to trade. Because you see what happened this last time when we had a correction here, like we did here. The next day, the stock gapped down, like it did here, but then closed higher on the day, relative to the open, like it did here. Now, this is red, this is green, so the close was lower than yesterday's close. But let's not quibble. Let's not talk about that. Let's instead just talk about a new support level being reached. And that is this level right here. So we get a pullback, boom, and a rally. A pullback. So with all this selling taking place, and you look at the volume, Twin Towers here, 2 days in a row, we get volume that's well above average, and it's all downside volume. It's all selling. We get that kind of volume, then is there a chance that Apple will actually trade up tomorrow on the iPads, you know, on the information release, whatever you want to call it, and then continue to move to the upside? I'm saying there's a chance of that. Am I trading it that way? No. I've said before, this is one of those weird times where it's like the chart doesn't even seem to matter. The stock is just being repriced with a higher multiple. Well, now as I see this, the chart does matter to me. There's no way I would short this stock, but I'm going to stand aside until I get a sense of those numbers, until I get a sense of whether the market is going to sell on the news, if there's more selling, or if there's buying. But here's how you can play along. I mean, here's exactly what I'm going to do. I am going to look at today's intraday low of 516.22, and I'm looking at that as being the maximum power of the bears. This is maximum selling power here at 516.22. If Apple goes below that level, I don't want to be long that stock. As long as Apple stays above that level, I do want to be long that stock. So it's not as if they're going to release the details first thing in the morning. They don't do that. But if the stock drifts lower, below that level, then I'm not going to want to own the stock. If, however, and this is a big if, however, the stock does drift below, let me reset this here. If the stock drifts below this and then starts to rally and retrace above, then I want to be long. So it's actually one of these types of things where you get to draw a cool little couple of boxes here. Red means sell, green means buy. The only nuance in this is simply that I think this level here is going to be kind of a line in the sand drawn by the bulls and the bears, the buyers and the sellers. And so it's very possible that you could get, flushed out a few times, just jigged out left and right during the day. So I want you to watch that. I want you to be careful about that. But this is a trade that you can make. Definitely a trade that you can make. I just want you to be sure and watch your levels. So check that out. Also, just one note. S&P 500 rolled over today. A lot of stocks, such as the metals and miners, and I've mentioned this. I remember doing a coal chart of the day not too long ago. Gave you a whole list of stuff that was not working and you should not be in, and those are now much lower than they were then. That analysis just, it should be plain to everybody, but it's not. That's just shorting techniques. That's various techniques that I have learned throughout the years. Some of them by the seat of my pants, but a lot of them just from other traders, really, really good traders. And so you can get on the short side before everybody else does. In fact, that's the key to shorting, is you want to be short before everybody else is. Reason I mention that is what's happened today and yesterday should give you a real respect for the idea that shorting stocks like I know right here with a buy stop right there is a profitable move. These are the types of trades that I talk about in my short selling workshop, which I recently did. And yes, this is a promotion for that. I'm going to take you to a page that explains all that at the end of this video. And I'm really proud of it, and I want you to use it to make you money. These are the types of trades that you can make if you understand how to short stocks correctly. You will find that, well, let me just put it this way. Today when the market was imploding, I actually closed out various short positions. You know why? Because my portfolio is at an all-time high. It wasn't at an all-time high yesterday, but it was at an all-time high today with the market down. You know why? Because I was net short. Or my bull put spreads are so embarrassingly out of the money that I could buy them back for about 9 cents. But I was net short on the market, and so I closed out my stuff with my portfolio at an all-time high. Now, am I telling you this because I want to brag about being the greatest trader in the world? No, I'm not the greatest trader in the world, not even close. Some of you listening to this, I'm sure, are better traders than me. I just happen to be a darn good teacher, and that's what I do, and that's what I do very well. So I'm showing you some techniques that work. They're not theoretical crap that you hear from other folks, nobody in particularly in mind here, but it's not the theoretical stuff, it's the stuff that actually works. So if you want to learn about shorting, I'm going to take you to this video. I'll let you figure it out one way or another, but this is the time when you need to start thinking about the other side of your game.